All right, here we go. What's going on, everyone? Hopefully, everybody's doing very well on this Monday morning. I hope everybody's doing well. This is Monday, November 23rd, boot camp day. Boot camp day. Boot camp day. Love the end of the month. Being able to talk about that. Let's go ahead and get into the disclaimer. Let's see what we have for its overall pairs, and then after that, let's go ahead and jump into some trading. So I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about Forex trading. Now, understand that Forex involves risk. Understand that risk means that you can either make money or lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. All right, so with that being said, I'm going to show myself onto the screen real quick. Just give me 1 quick second so I can be able to show that slide over. Okay, there we go. We should start to see myself on Facebook and YouTube. I'm not putting anything on Instagram today as of yet because I have to use my phone for a few different things. There we go. I see myself on YouTube. I should see myself on Facebook in 1 quick second. I'm just waiting for it to be able to go through. While that's happening, I'm going to clean my glasses. And okay, still waiting on it. Okay, there we go. So, hope everybody's doing very well. First off, before we end up getting started, thank you everyone for the birthday wishes. I ended up having a very good birthday. Me and my wife actually ended up going to Nashville, ended up hanging out in their city. Definitely a culture change, but it was definitely very welcomed. Love the atmosphere that they ended up having. Love the food that they ended up having. If any of y'all know me, I'm very much a foodie, but we ended up having a very good time. It was very cool to be able to see. But now we really got to get focused. We're going to the end of the month. The end of the month, that big push, really trying to focus in on being able to get everyone started when it comes down to Forex trading and being able to invest in yourself and go from there. If you have not done so, remember the Believe in Yourself Bootcamp is going to end up starting today. The event link actually ends up closing at noon. If you're still interested in being able to hop into it, you can go to bit.ly/Believe in Yourself Bootcamp. I placed it in the link on both of these. You can be able to hop in and be able to go from there. Remember, it's $20 a session, but what you're going to end up receiving is the overall videos. You're going to end up receiving a trading strategy that you can use on your phone. You're going to get a free broker. You're going to end up getting my book, Success in Forex, and you're going to get an equity management calculator that's going to end up helping you out when it comes down to your trading. Remember, every day is broken down into 5 different things. Out of those 5 different things, you can end up learning everything that you need to know to be able to get started and to be able to decide, do I want to be a Forex trader? That's the biggest thing that we end up focusing in on. Do you want to be a Forex trader? And if you do you have the tools to be able to get started? And that's what we end up giving out. So very excited to be able to talk about that. Let's go ahead and talk about what's going on for the overall news. We keep on hearing things about vaccinations and everything else like that. This will be the 3rd week where we end up seeing something that's going to end up saying something about vaccinations. I guarantee you, if you go to CNBC, Bloomberg, or anything else like that, they're going to end up saying that the vaccination is 95% correct. Average effectiveness is 70% or anything else like that. So, just keep that in mind. That's the biggest thing that we're going to end up seeing. Positive vaccine news means that the U.S. dollar in general is going to end up going up. Silvers and everything else are probably going to go down. Silver and gold are probably going to go down. Platinum will probably go up. Palladium will probably end up going up. And we look at stuff like Bitcoin. Bitcoin has been on a tear. We'll see how that's going to end up rising. May end up hitting 20,000 before the end of the weekend. Who knows? We end up kind of getting into that as well. But that's some of the biggest things that we need to pay attention to. Second thing we end up being, let's go ahead and take a look at the U.S.-based pairs. We can look and see with the Euro Services Market PMIs, they actually end up coming out. It actually ended up doing very well in France, in Germany. It ended up doing subpar. Eurozone as a whole ended up doing subpar. Actually ended up missing out on the numbers for November as a whole. The pound actually ended up having the market services PMIs. It's still considered to be a recession style when it comes down to these numbers. Remember, anything above 50 is a very good number. Anything below 45, anything below 50 means that it's contracting. If it contracts multiple months, so that means that basically you're in a recession type of deal, and that's basically where we are when it comes down to places like the pound. especially when it comes down to November. And we end up going from there. So later on today, we're going to end up having some monetary policy report hearings from the pound. The U.S. Is not going to end up having that much information. Remember, Tuesday, me as a school teacher, we're going to be done on Tuesday for its overall teaching. Then obviously we have the holidays. So we should see light trading when it comes down to volume, especially after Tuesday. But understand, typically that's when you end up having your flash crashes and stuff like that. So you really have to pay attention to what's going on. Either take your money out of the market or have something be able to monitor it, like a EA or something like that, so you can be able to put yourself in the good positions. But I expect low trading volume probably after Tuesday, and then we end up going from there. Let's go ahead and take a look at the overall charts and be able to get our eyes on that. We take a look at the big three. If you're not familiar with the big three, or if you're new here, then what we end up doing is that basically what we end up doing is kind of seeing what's going on with the US dollar index. We take a look at what's happening with oil. Then after that, we take a look at what's happening with gold. We do that because it gives us a good identifier about what's going to end up happening with the overall market. Last week, what we ended up seeing, well, 2 weeks ago, market ended up breaking. We had a retest, we had a break, and we broke below the support. The market is moving down towards 11,867, meaning that we should see that the market could continuing moving towards the downside. That means that U.S.-based pairs, you want to look to be able to sell when it comes down to those overall pairs. We're starting off the morning very strong towards the downside, meaning that we should see that people actually should start being able to sell a little bit more. We've had 7 consecutive days with the market being selling, and we're starting to see that the market is getting close to the buy zone. So there may be some hesitation on people actually starting to sell a little bit more, but overall going into the morning, we probably should see for the next couple of days that we should see that the market would start to sell off a little bit more going overall. I want to see how the market kind of react at 8:30 and going into 9:30, obviously when the stock market opens, but we're looking at that the US dollar index is going to end up being bearish. Taking a look at what's happening with oil. Oil has pushed past the $43 mark. Then after that, started to retrace a little bit. The market is close to the sell zone at this particular point. What does this mean? It means that the market is bullish. Now, this is pretty simple on this one. There's a demand because of people actually traveling for people to be able to have oil. With the demand being there for people needing oil, then that means that the price would end up going up. That's very self-explanatory when it comes down to what we're looking at. We should see that the market could push bullish. Does that mean that there's a trade to be able to take? Not really. Yesterday, if you were trying to scout the market a little bit, you could have, but really the trade to be able to take was sometime last week when the market ended up hitting $34 a barrel and then started to push back up. So right now, there's really no trade to be able to take for its oil, but but you would see that the U.S. Canadian dollar probably should be in a selling move right now at this particular point. Taking a look at gold. What has happened with gold? Gold at the beginning of the morning was at 1877. Shortly after that, we end up getting vaccination news. Once again, market ended up taking a smaller fall than what it did last week. Once again, the low was at 1863. So what does this mean? It means that buyers are really getting into these lower prices, which means that buyers should be able to maintain and hold from a longer term perspective. I am looking at being able to buy this long term. I believe that the market is going to end up going past 1865. 1865 to, let's try that over again. 1887 towards 1920. After it breaks 1920, it will start to move up towards 1965. And then after that, we'll start going past the 2000 level up to the 2300 level, in which I think that's where the market's going to go long term. Now, overall, what does this mean? That means that you should be looking at being able to buy a little bit more than sell. But right now, there's no momentum in the market as of yet because we keep on hearing news about vaccinations. But what this does is give you low prices to be able to get in and be able to understand that if you stay in this at a low price at this particular point, it will pay off going toward the long term. I believe that this market is eventually going to end up showing bullish. We keep on looking at the U.S. dollar index, and we keep on seeing that the U.S. dollar index is falling. And what happens with that is people start to move into more safe havens. One of the biggest safe havens is the gold standard. Being able to take a look at gold as a trade to the upside will probably end up being a better move overall if you're trying to be able to do so. Now, let's take a look at this from the 2 hour. We can see that the market ended up having that strong push up to 1887 for the high, or 1875. And then after that, started to fall down low. Right now, we're seeing a lot of consolidation. We've had a lot of consolidation for this overall movement. Anything right around the 1859 area, I would look to be able to buy. If it breaks below 1855, then that means that we should see a little bit more selling off. But overall, anything right around that 1859 area, 1850 area, I will look at being able to buy as long as it maintains this overall position. Remember, I will look at being able to take that long term. This is definitely more of a long-term play going into the first of the year and everything else like that. But I keep on seeing that support was right there, support was right here, support was right there, support's been right there. If it falls down again, I believe that support will end up being there again. And so I will look at being able to buy once you end up getting a lower price overall, just to maintain it. But at this particular point, if you're not hedging it, or if you're not staying in it long term, get in your buys, put your stop loss at a very manageable position, and just ride the wave. Just know that it's going to end up taking a while for it to be able to happen and kind of play out. This should be more of a 2 to 3 month type of thing going into the beginning of the year. Okay, so that's where we're at when it comes down to this overall pair. NAS 100. Let's see. Oh, I hit the wrong button. Let's see. Get this out of the way. Let's take a look at the let's see. Okay. NAS 100. Let's take a look at this real quick. What are we noticing? We're looking at this overall pair. We see that the NAS 100 is basically in consolidation. When it comes down to this overall move on the daily, because it is in consolidation, because it's at the resistance, and because, quite frankly, I believe that the market is going to end up being basically bullish. I'm not necessarily looking at being able to make a trade right here at this particular point. We probably will see some type of big push right around that 8:30 time, that 8 o'clock to 8:30 time, and then after that, it probably look like it will probably end up selling off just slightly. But overall, what am I looking at being able to do for this trade? Really nothing much at this particular point in time. There's really no trade to be able to take on the NAS 100 for that move. If we take a look at US 30. US 30, what we're seeing right now is that the market overall has broken bullish out of this overall consolidation area. We see that it failed twice. It fell right here, fell to support, went to resistance, fell down to support, and then broke out of that overall resistance area. Currently, the market right now is basically in the no trade zone, but it's getting close to the buy zone overall. We can start to see that we have a slight push bullish. We just hopefully we can be able to see that this maintains and starts to keep on moving bullish towards the end, and be able to go from there. Currently, the market right now, from an overall movement standpoint, is getting close to the sell zone, and we're starting to see a little bit of resistance of 29,450. The market breaks out of that 29,450 area, then obviously we'll look at being able to see this market keep on pushing up and going past the 29,800 area, or at least trying to attack those overall highs. We can see that from the 2 hour. But overall, what am I looking for right now? I expect that the market is going to continue to be bullish. Remember, we said that we wanted to buy if the market went down to 28,800. Now, it ended up breaking a counter trend line break bullish earlier. If we had that movement and we can be able to maintain that movement, then obviously I'll look at being able to maintain the overall bias that I have. Currently, right now, I'm actually in the market with a buy off my EA. It was up almost, let's see, US 30. The market went up to 29,450. And since then, basically ended up bouncing off the 50-day moving average. As long as it stays above the point of control, at 29,370, then after that, I believe that would be very good for this overall trade overall. But right now, it's just kind of early days. Remember, the market is getting closer to the buy zone, so I would look at being able to buy. But got to get a little bit of push from the 830 timers and everything else like that, and we'll go from there. XPX 500. What are we looking at right here at this particular moment? Currently, right now, if we're looking at this movement, I'm actually in a buy on this one as well. Let's see if it shows up. Let's see, XPX 500. I'm currently down on this particular pair, but same deal. It has that same type of movement. Market has market has formed a beautiful W pattern, double bottom from this overall movement. It's right here, and it's at the overall resistance, trying to turn past resistance into future support. This is a picture perfect breakout and then a retest type of mode right now. What are we looking for? We're looking for the market to be able to, obviously it made that move, went down to support again. It broke out. Now we're looking for the retest right here. We're looking for it to be able to break past this overall counter trend line break. If it does that, then a push will end up going up to at least 3760 for the overall move. That's what I'm looking at right now at this particular point. If we're going to make this move, I think that this move is probably going to end up happening today and then probably ending on Tuesday. And then after that, seeing how the market would kind of die down a little bit going into the holiday for Thanksgiving and everything else like that. So I am looking for I'm probably looking for a push to the upside first on Monday. On Tuesday, I probably wouldn't look at being able to trade it on Wednesday or Thursday, definitely not Friday. And then after that, go into next week and see how the market's going to react from that. But that is those three. US 30 and XPX 500, I'm actually in buys at this particular point, kind of down on one, up on the other one. We're going to see how this market kind of maintains and kind of holds, and we'll kind of see what happens after that. Obviously, any type of good news will actually end up making this market kind of push up to the upside. But I'm letting just let my EAs kind of do their thing and trusting and seeing how they're going to end up working out and going from there. You don't know what an expert advisor is. An expert advisor is a code that basically ends up trading for you. Here at Carter Cow Capital, what we end up doing is we actually end up doing a lot of research and development to be able to find the best codes and be able to find things that will allow you to be able to do you, which is basically do life and go to work and hang out with your kids, hang out with your family, and allow the system to be able to trade for you and create passive income for you. Last week, the US 30 alone actually ended up bringing in $2,800 on one trade on Monday. And actually end up doing it again on Wednesday. So literally, that's basically $2,800 in your pocket. You really didn't do anything for the overall movement. I have a lot of trust into it, and quite frankly, just allowing the thing just to be able to do its thing when it comes down to the movement. We'll see what happens, and we'll kind of play out from there. All right, let's take a look at the US-based pairs and kind of get into that. What we're looking at overall, we should see bearish movement, but more than anything else, it's kind of the same thing that's actually happening. We're looking at the US Canadian dollar, and this is the reason why I really haven't been talking about a lot of US based pairs, is because of the consolidation that we're seeing. You can see that this market is bearish overall with the US Canadian dollar. We see that oil is actually going up, so we should see the market start to push down. But is it in a position to be able to trade towards the downside? Right now, if we consider this to be consolidation, then the answer is no. I would wait for the market to be able to break past 1.30, and then after that, look to be able to sell it then once it gets into a full-blown trending type of move. Right now, it's not there yet. So U.S. Canadian dollar is out. Taking a look at U.S. JPY, we can see that the market has broken into a triangle at this particular point. Currently, the market is in a no trade zone on the 2 hour. If we look at the daily is basically in the no trade zone as well. If we're looking at being able to sell this, I will look at being able to sell this long term to 101 and then to 99.20. But at this particular point, the market has started to die down for its overall movement, and it's getting closer to the buy zone. With it getting closer to the buy zone, then that means that we should see that the market would start to retrace a little bit and be able to go from there. Remember, this large move right here with that vaccination news, they end up happening the first time that we end up hearing something, and then from there we heard it again the week after that, and it sold down. We heard it again this morning, and there was really no consolidation. So it's kind of like the boy that cried wolf. The first time that everybody ended up hearing it, everybody ran and everybody ended up making their movements and all the other stuff. The second time, everybody was like, okay, we're going to listen to you a little bit. And then the third time, like, everybody was like, okay, shut up. So we're going to see what's going on with these overall pairs. But once again, I do believe that this market is going to end up being bearish. It's been bearish since the summertime. Looking at what's happening with the US yen, with the Euro United States dollar, market is hitting the resistance at 1.19. It literally just hit 1.19 as we spoke just a second ago. What I'm looking for is a breakout and a retest. Then after that, I will look at being able to trade it bullish. Until then, until then, until this market ends up proving that it's bullish, I will look at it being in consolidation. What does that mean? I will actually look at taking an opportunity of being able to sell it, hypothetically, if I was so inclined to be able to do so. But looking at what's happening with the U.S. dollar index, the U.S. dollar index is considered to be bearish. And to me, I think that there's really no momentum on being able to sell it to the downside at this particular point. So I'm going to stay out. Hypothetically, if you wanted to be able to trade this based off of consolidation, if you wanted to be able to trade it just saying, okay, that the market is at resistance, and I have traded it at resistance before and the market has failed, then that's fine, hypothetically. Looking at it from a day perspective, you can see that the market is getting closer to the sell zone, and we definitely at resistance. But what I would end up doing is it would have to prove it to me if I'm going to end up taking a sale on this particular position. I don't see that. It's not proven anything as of yet. I would try to see if I can get it as high as I particularly could, and then after that, if it does break a counter trend line break, and then after that, if it does break a counter trend line break to the downside, especially if it's somewhat close to that overall area, then obviously you could take it. But right now, U.S. based pairs to me are bearish, meaning that I'm looking to be able to sell instead of buying. I'm sorry. Yeah, I'm looking at being able to sell on the U.S. dollar, which means that I'm actually looking at being able to buy on the Euro United States dollar. So I wouldn't look at being able to trade this one at this particular point. But the market is at resistance, so I will say that. Okay. Going into the U.S. Swiss franc, same thing. Consolidation. Market is moving toward the downside. I expect that the market is going to fall down to 90 cents. If you're looking at being able to take a flyer on any one of these pairs, I would think overall, I just don't like where the market is when it comes down to the stochastic. It's actually in the buy zone. But I would take a flyer on 20 pips. I would take a flyer on 40 pips. I would actually believe that the market is going to move down to 90 cents. So overall, if I'm looking at being able to trade anything, this will probably end up being the pair that I would look at being able to trade toward the downside the most, and be able to go from there. Now, once again, me sticking to my guns and me trading this the way that I typically trade it, I still consider this to be more consolidation. And if I was going to end up trading it, I would have traded it up at the 9100 area and then look at being able to sell it down. Right now, we didn't get that. Because of that, I'm not necessarily interested in being able to trade this one unless I'm trying to scalp it for a little bit when it comes down to movement. So I'm out on that particular pair. If you want to, that is a pair that I would kind of pay attention to overall and be able to see what you can be able to get. One pair that has started to move very well has been the Australian dollar United States dollar. And looking at the Australian dollar United States dollar from where it is at this particular point, we can see that on the weekly, that the market is starting to push up. We're looking at the market starting to go up to 77.25 for the overall pair. So the market is considered to be bullish. If we're looking at the overall daily, we can see that the market has broken out of a counter trend line break bullish for this overall movement. Today, that movement has been overall about 37 pips. On average, it moves about 74 pips. So we should see some more movement toward the upside. If I'm taking any type of trade, that market would end up being a bullish trade to the upside. Overall, I would not look at being able to sell this one at this particular point. The question is, how close are we to the D extension off of this move? If we go and take a look at these fibs, we can see that a sub fib will end up taking you up to 75. The market is getting close to the overall B. So once again, that is a pair to be able to look at for being able to trade to the upside, if that's something that you're inclined to be able to do. But once again, that is something that I would look at being able to particularly do for being able to buy. The question is, are we in a good position to be able to buy right now? Let's take a look at the 2 hour. 2 hour is very close to the sell zone. Quite frankly, we're going to get into it. We should have got into it earlier. We should have got into it yesterday for that overall movement. If you get into it now, the thing would be that. Let's go to the fractal low. Let's take a look at this. From a timing perspective, this is not right. And the reason why I say that it's not right is because of that right there. It's because the market is at resistance again. And it's kind of like what's happened with the Euro United States dollar. And let me see if I can pull this to the front. Visual order. There we go. What we can see is that the market is basically at a consolidation resistance level. Because the market is at a consolidation resistance level at this particular point right now, what that means is that you may end up seeing some people starting to sell, kind of like what I think is probably going to end up happening with the what I think is going to end up happening with the Euro United States dollar, at least earlier throughout the morning. But the better play on this one would be this. I would see if the market's going to break out. If the market breaks out and then after that it gives you a retest towards the top side, right? And then after that it passes that retest towards the top side, then after that I will look at being able to buy from that particular position. That is the move that that's the move that I'm kind of anticipating right now going into the beginning of the week. Because once again, we see that the US dollar is considered to be weak. We've had 7 days of overall bearish movement, even though it does not look like it has been a lot of bearish movement. It has been bearish movement from the downside with the US dollar. So what I would particularly pay attention to is how is the market, if the market going to end up breaking out of this area? If the market does break out of this area, is it going to retest and then start to push back up? If that happens, then what you will end up seeing also is that the market will start to move into the buy zone or very close to the buy zone and break a counter trend line break toward the upside and give you an opportunity to be able to trade it to the upside. So that is something that I would particularly pay attention to. Taking a look at the pounds. The pounds have had a strong morning. Have had a strong, it actually started, end up having a very strong morning. Typically, the market moves about 113 pips. It's already going to move 96 pips at 113 pips for today. The market has hit the D extension for the sell fib, so I will look at the market starting to retrace a little bit. If you have a smaller account, I typically keep or have people shy away from the pound just because of what the overall leverage is. Now, if you're trading going a non-regulated broker like Hugo's Way or some other non-regulated U.S. broker, then obviously you'll get a better number when it comes down to the amount of margin that you can be able to use, and you can be able to trade this one a little bit easier. But on a 1-to-50 leverage, I wouldn't trade this one at this particular point. But I do believe that the market has broken the B, and we should see that the market will gradually start to go up to 138, which is about 500 pips from here. So what I would end up doing is I would see if we can get a little bit, another low price. If you can, then after that, I'll look at being able to get in. I wouldn't chase the market right now because it is at a high price. Until then, there's really nothing to do on this particular pair. New Zealand dollar, we go ahead and limp into this one and be able to go from there. We're gonna take a look at the New Zealand dollar Japanese yen. This may be our one and only trade start going into the overall week. So we're gonna pay attention to that one real quick and see what's going on with that. New Zealand dollar, United States dollar. We take a look at this from the weekly. We can see that this market is starting to push back up. It broke out of that overall consolidation area, got a retest, and started to move. The market has been firing on all cylinders for the last 4 weeks. Market is expected to go to 72. 72 is the overall resistance area, and I think that what I will end up looking at is, are we going to end up, do we have low trade volume? If we have low trade volume, then this is a overall pair to be able to look at being able to get into. From a daily perspective, we do have low trade volume, meaning that, quite frankly, there's not a lot of people that are interested in being able to buy up to these prices anymore. And you can see it right over here for the overall trade volume. There's not a lot of people actually getting in. I think this is the particular pair to be able to pay attention to. Let's see, let's get more information. Let's see where we're at. The more information that we get, the lighter that I see when it comes down to people actually being able to trade up here. There's a point of control at 72. 34. The market is at 69.65. Once again, I would look at being able to buy on the New Zealand dollar. I would not hesitate on being able to say that I'm interested in being able to buy. Quite frankly, I would be more aggressive on being able to buy for this overall pair. And keeping that in mind, I think that this pair has a lot more to offer when it comes down to being able to get in. And in particular, I would definitely look at being able to buy on this overall pair. I wouldn't necessarily look at being able to sell. This will actually be more of a long only type of situation, and just say that whatever we end up getting, if we can be able to buy, then let's go ahead and take it. But I do think that this one over time is going to end up hitting. I think it's going to end up hitting these overall numbers. The market has broken past this overall 6780 area, which was very important for this overall consolidation area. And since then, the market has been making nothing but higher highs for this overall movement on a 2-hour. Now, the question is, could you get in and being able to trade right now? Hypothetically, let's see. Let's go back to my other charts. So weekly. Daily is not going to give you any help, and the market has already retested. There's a D extension at 70.42, which is about 80 pips from here. If you're looking at this one be more of this definitely be more of a scalping trade. We'll look for a counter trend line break, in which we already have. Okay, so the question is, what would you put your stop at? Go back to the daily. See the arrow right here. Yeah, let's put an arrow right there. Let's go to the 2-hour. Let's see what's happening with that. Arrow at right there. Let's zoom in this overall spot. After that, we can be able to see if there's anything to take. Try this again. Let's try this again. There we go. Let's see. Stop, if I'm placing anything, will end up being below 68. It'll probably be 68.60. If I'm placing a stop, it'll be at 68.60. At this particular point, that's about 100. That's about 100 pips away. We'll go 68.60 right there. What would be your take profit? If you're just trying to scout the market for today and trying to get something, that would not work. If you're just only trying to go for a short-term move. If you're trying to go for a longer-term move, I will look at being able to trade this one a little bit more towards the 72 area. I don't think it's going to end up having that much resistance going up toward that area. I truly don't believe that. And to me, it doesn't really matter what a daily is on the stochastic. I think that we're just going to see some bearish movement, and the market is going to continue pushing bullish. I think this is the strongest pair against the overall dollar on being able to make a move. The market has been moving 67 pips a day. Currently, the market has moved 43 pips this morning. But once again, we're getting towards light trade volume. We're getting towards light trade volume, then that means that you should see that the market will continue to start pushing bullish, and you'll have more people trying to stay away from being able to trade this one. So overall, I like to move up to 73. Like I stated before, take a flyer on it. We'll take a flyer on it. Now, I'm going to go with a lighter percentage on this one. And the reason why I'm going to go with a lighter percentage on this one is because where the market actually is. I can only go with 3% for what's being able to trade this. But I think overall, even though it's not necessarily in the greatest position, I think it's too much to pass up. We're going to go 100 pips. $5,000 in an account. Let's go 3% right here. We're going to go all the way up to, we're going to go up to 73 currently right now. We're looking at this overall trade. I would say that's 326 pips away. So 100 for 300. I'll take the 1-to-3 risk reward ratio all day long. So we're saying 300. It was 326. And if I'm taking this trade right now, that means I can get in with 1.5 micro lots. 1.5 mini lots. New Zealand dollar, United States dollar, new order. Make sure that this is the right account. Yep. Now, the question is, why am I not going all out on this overall pair? Simple reason why I'm not going all out on this overall pair, and I just got here and placed in my buy, is that if we're looking at this trade, we can see that the market is in a R3 zone. It's in a push zone. The market has already done proven that it's ready to go and being able to push. If we got into it earlier this morning, then we obviously would have been up. The market is in a no trade zone right here, but it has broken out of a consolidation and retested. It's that low trade volume, but once again, there is hypothetically some movement to the downside that you could kind of stay away from. And right now, if we would have got into it yesterday or we would have got into it last week, we probably would have had a greater volume to be able to get into it. But at this particular point, I would rather manage my risk instead of just trying to go guns a-blazing and try to get into this pair, and it doesn't necessarily work out. So we said that the stop was going to be at 68.60. 68.60. We said our take profit was going to end up being at 73. I think this is a very good trade to be able to just swing trade and just let it manage and just play out from there. Keep your eyes off of it. This will be one of those ones that will take a little bit of time to be able to get there, but just remain patient and allow this market to be able to move, and I think you'll be okay for us being able to go there. Let's take a look at the New Zealand dollar, Japanese yen, and we talked about that one as well. We'll look at the currency strength momentum. Maybe that might end up helping us out. This will be the last one. We done went overtime on this one for real, but U.S. dollar is weak. Japanese yen is weak. We can see that the New Zealand dollar is second in overall position right now. We should see that it should probably start to die down just a little bit, but the pound is actually strong based off of the overall economic news earlier today. And we might end up, once again, having a trading opportunity. But once again, this trading opportunity doesn't look as well as it did on the 19th. On the 19th on Friday, if we would have took that buy right there when the counter trend line break would have happened, currently right now would be up almost 100 pips at this particular point. I'm not too fancy on being able to take two trades that have that same type of play, but this market has broken the counter trend line break bullish, and there's nothing that we can doubt about that. This market is expected to go up to 76.96, so we go 76.95. The market is getting closer to the buy zone. It has already done broken out of this counter trend line break and already started to move. Where will we place our stop at? We'll go back to the 2 hour. Let's see what we could be able to place our stop at on the 2 hour on this position. I would actually be a little bit more cautious on this one. Well, and I'll place it just below all of this consolidation area right here. I'm going to place my stop at 71.30, 71.38. From here, once again, that's about 83 pips towards the downside. This one is actually in a better position for its movement, but same deal. I'm going to end up being a little bit more cautious for its overall pair. Let's see. Let's go to our trade ticket. Let's see. We go to the daily. Take profit on this one is expected to be at 76. Okay, hurry up and make a move now, Travis. Come on. At 76.96. That's about 475 pips away. 475 pips away for 80. I'm gonna go with a 4% risk on this one. I actually like this one a little bit better when it comes down to risk. Let's see, 86 pips. That means that we can go with a 2.6 for the overall risk on this overall trade. Order. Now, if you join the boot camp, then obviously this will be a part of the things that you could be able to purchase, which will end up being the trade tickets, which will allow you to be able to see what is your overall risk compared to what's your overall reward. Currently, right now, what we're risking is $200 to be able to go up to $1,200. So I like that risk. I really do like that risk versus reward. Obviously, this is one of those trading pairs that's going to end up taking a little bit of time to be able to get into and be able to go from there. But we have 2 trades to be able to take and be able to take a look at. As long as this market stays above this overall counter trend line break and does not wane and stays above this overall support level, 71.38 is a very good level for being able to place a stop. Let's see. If it drops quickly, then we'll automatically know. But I mean, risking only $200 to be able to go out to $1,200 at this particular point and allow the market to be able to move, I think is very much warranted, especially if we keep on getting this overall push that we expect that's going to end up happening. Now, once again, will this happen overnight? No, this will not happen overnight. But I think overall, this has been a year for the New Zealand dollar and the Australian dollar. So being able to take a look at this overall pair and allowing this market to be able to move, I think is a very good thing to be able to see. We're getting closer to the buy zone, so we should start to see a little bit more momentum actually come in. So that'll be 2 trades that we'll look at being able to trade towards the long term. So there we go. We got 2 trades here. Hopefully everybody end up learning a lot while we actually end up doing this. We actually end up going through and taking a look at some pairs. And currently right now, we can see that the US 30 and XVX 500 are doing okay at this particular point. Remember, we expect that those markets are going to end up pushing up. We just got into the New Zealand dollar, United States dollar, New Zealand dollar, Japanese yen. We're going from there. You're interested in being able to learn a little bit more about what we end up doing, how we end up learning how to be able to trade this way, being able to do it with very low risk to high reward returns on being able to trade it, and understanding why equity management and being able to trade with other people's money is so very important, and how to be able to use compound interest to be able to allow you to be able to create passive income. If you want to learn how to be able to do all that stuff, then you need to make sure that you end up hopping into the Believe in Yourself bootcamp. We actually end up going extended. We did 44 minutes today. Typically we do 30, but I wanted to make sure I end up doing something as a gift for everyone to be able to get started and be able to get to there. I'm so excited to be able to help out everyone today. Once again, if you're interested in being able to go through, you still have a little bit of time to be able to hop in and do the boot camp a little bit later on. But until then, like always, plan your trade your plan. Everyone, y'all end up having a good one. See you tomorrow.